Yeah, what's up, everybody? It's your boy Orlando, aka King Smitty. Welcome back to my trading journey, and I do have a pretty long video for you all today. So before we get started, go ahead and hit that like and subscribe button. I'm gonna talk about my portfolio today and how we're starting off the year. I am gonna have to do a little bit of recalibrating my portfolio to make things a little bit more even. Because looking at my portfolio, things are a little lopsided in here, but it happens towards the end of the year or beginning of this year now. So beginning of the year, let's make it a little bit more even, so that way we're not overweighting anything. So we're gonna look at all of my positions and what I feel about them, how I feel about them. Let's start off with the highest, and we're gonna go down to the lowest. Number one in my portfolio is Ethereum. ETH is currently sitting at 18.9%. And that's because I was loading up on Ethereum when it was a lot lower than what it is now. And then it's grown heavily. A lot of my overweight positions are overweight because of the growth that they have had, and not because I'm just dumping money into that one thing. Um, but no, it has grown substantially from where I bought it at, and I could definitely see Ethereum have a large run this year, especially with the Bitcoin ETF announcement and the Bitcoin halving. I could see this being like a sympathy play and also running up alongside with Bitcoin. So if that does happen, this security or a coin could definitely go from being 18.9% of my current portfolio to easily like 25 to 30, depending on how far it runs and how fast it runs in comparison to the rest of my portfolio. Next, we're going to talk about Tesla, ticker symbol TSLA, and it is sitting at 16.3% of my portfolio. And Tesla has had a lot of growth. Um, Growth has been a little bit, I won't say stagnant, but it has drawn back a little bit. They had recalled a couple million vehicles over there in China, and China has been going through their zero COVID policy for the last couple of years. But as they open up, revenue should continuously grow for Tesla, right? Um, they're getting better with their autonomous driving technology, and they also have their Tesla truck coming out as well, which all will boost revenue substantially, right? And with China being the biggest EV market, if they and Tesla being one of the biggest EV makers in the world, if they can capture a good chunk of that market, this could definitely run up as well from being 16.3% to almost 25% of my portfolio. And that's without me adding any other shares. That's just with its growth. Now, if it does drop below the 200 mark again, I will probably buy a few more shares of it and let that run for the long haul. Hold that for the long haul, shall I say. Next is Nvidia, sitting at 8.1% of my portfolio. Um, it is the worldwide leader in visual computing technologies and the inventor of the graphic processing unit, the GPU. Um, it had a substantial, an incredible, mind blowing run in this last year, which is the main reason why it's even this high in my portfolio at 8.1%. Um, the institutions own over 50% of NVIDIA. So when institutions own that much, you know you're in a good play. The only thing is, once institutions start dumping, not saying it's going to happen anytime soon, you will see a super large drop into this. But at this time, AI is the biggest thing right now, and they have the technology, the hardware for the AI. So they are one of the biggest players right now in the AI, well, the biggest player right now in the AI industry. So I could definitely see this growing some more. I'm not trying to add into this at all right now. If it drops below 400, I may nibble at it, buy some fractional shares. But at this time, you can see my position is at $153. I'm just gonna let this ride it out, right? Amazon. Um, I like Amazon. It's sitting at 7.5% of my portfolio. I will probably buy into this if it drops below $130. I'll probably start buying a few shares at a time, just one here, one there. Um, Amazon is a sleeper when it comes to the AI industry. They have the Amazon Q, which is a Chat GPT style chatbot designed for business users that will be able to be a part of Amazon market, um, which is helping them dominate with the AWS, with the Amazon cloud platform. In 2023, Amazon gained 81% roughly. They have been focusing on profitability. They have laid off like 27,000 workers, which is like their largest layoff of all time. They've cut out experimental businesses like the robots delivering um, packages to your house. I believe like drones. They're supposed to be taking the packages, dropping them off at your front door, and then flying off, which will cut on like paying drivers, gas, maintenance on vehicles. That would, if it works out, it'll cut out all those. But at this time, there was a lot of money going to R&D, research and development, and testing. So they cut that out. They cut out their Amazon healthcare services in order to increase their margins. So they've been increasing in their profitability. So now they have all this cash on hand. So once the market turns around, these interest rates turns around, and things aren't as expensive, now all this free cash they have on hand, they can go back to these experimental business models and try to get that work for the future growth, right? Next, we have Google, sitting at 5.7% of my portfolio. Google has announced that they are disabling their cookies for Google Chrome users, which could affect everybody as far as ads. Because as you know, when you go on a website, let's say for Nike, you want to buy some Jordans, and this little pop up says accept cookies, you probably ignore it and just hit yes, or just hit X. And then you leave that Nike website and you go somewhere else, Facebook, um, Yahoo, YouTube, anywhere, and now you're seeing Nike commercials because you accepted those cookies, or those cookies are on your phone or computer. So now it's following you, saying, "Hey, let's buy these Nike, let's buy these Nikes." So they're disabling that, which doesn't necessarily affect them. It affects a lot of the companies that's paying for advertisement from Google, which I feel like maybe at this point they'll have to pay even more to advertise, because now those ads aren't following people around the internet and where they're going. So maybe they have to pay a little bit more to get a little bit more exposure now, since they can't follow the users. Um, a sleeper for Google is YouTube. YouTube has gotten more screen time than both Netflix and Disney Plus in this last year. So receiving revenue from ads from YouTube is a gold mine for Google. Also, Google has their Gemini project, which is the first AI model to outperform human experts on the massive multitask language understanding. It is like an advanced model of Chat GPT. When you compare GPT-4 to the Gemini model, it outperforms out of 30 out of 32 measurements. It outperforms the GPT-4 model. So Google's definitely trying to get into the AI space as well, and trying to be a dominant player in there. So we'll see how that works out. If Google drops below 120, I'll start buying that. I did try to start buying shares when it hit $80 last year, based on my technical analysis. So it has been in like a strong uptrend since then. If it pulls back to 120, I'll buy a share here and there, similar to like Amazon. Next on my list is Neo. Neo is sitting at 5.1% of my total portfolio, right? Neo is not the biggest Chinese electric vehicle maker. It is not the biggest. But Neo delivered, listen to this, 160,000 vehicles roughly in 2023, increasing by 30% year over year for deliveries. So that's a lot of growth. I didn't expect Neo to be a high mover last year. I don't expect it to be the biggest mover this year. I do expect it to begin to start going up again this year. But 2025 is when I do believe the growth will come with Neo. 2024, I think it is going to be a beginning of a move, but I don't believe it's going to happen truly until 2025. It is located in China, which is, like I said, with Tesla, the biggest electric vehicle market at this time. So if it could just capture like a good 10% of the market there, that's huge growth for Neo. Not even discussing about entering other markets like America or India or anything like that, Germany. Just strictly talking about China. If it can capture 10% of that market over there, huge growth, huge revenue for them. Um, Neo is not yet profitable, which really deters people away from the company, and that it being a Chinese company. But I don't believe it's that far away from being profitable. So once it is profitable, we could see a nice little run on Neo. And then they announced their new sedan, which I believe gives Porsche a run for its money, and the stock hit a huge jump up in shares in the share price. So just imagine when they release these cars, and then imagine when they release newer vehicle models, and they how can I say this? Perfect, not perfect, but let's just say perfect their battery swapping technology. So instead of you waiting to charge your battery up at a charging station, you just swap it out, which will take like two minutes rather than sitting there 10, 15 minutes waiting for a charge, right? So they're poised to be a real player in the electric vehicle market. Um, they're probably top 10 in the Chinese market right now, but we'll see how Neo goes once they reach profitability. I definitely expect it to run. Apple currently sitting at 4.8% of my portfolio, and people are probably like, "How is Neo sitting higher than Apple?" I bought Apple and I forgot about it. I just I bought it and let it sit. But I am gonna be buying more Apple, especially if it drops below 150 ever. I'll probably start trying to load up on Apple because I do believe Apple is gonna drop. I'm not gonna say significantly, but it's gonna have a drop. It has been gapping down lately, and Apple's biggest supplier, Foxconn Text Group, had which is the world's biggest iPhone assembler, expects a revenue decline. So the assemblers of the iPhone are expecting a revenue decline, and that's because iPhone 15s are like $1,000 to like $1,600, and it's nothing spectacular about the phone, compared to the last one or the last two. And then iPhone 16 is probably going to be the same way. It's probably going to be an upgraded iPhone 15. And in today's time with interest rates just continuously growing up and getting higher, eggs getting higher, gas getting higher, bills are getting higher, credit card interest rates are getting higher, people are content with keeping their old phone. We don't, or they don't necessarily care to upgrade to the newest iPhone this year or maybe even next year. They're like, you know what? Looking at our budget, we might want to just keep our phone right now. We don't want to upgrade. And that's going to hit Apple's revenue. So I could definitely see that coming back down a little bit. Once it does come back down, I'll definitely try to put Apple up. buy a good amount of shares, at least make this 10% of my portfolio right now. We'll see how that goes. Well, not right now, but we'll see how it goes in the future if I can pull it up to at least 10% of my portfolio. Next, we have Disney, ticker symbol DIS, currently sitting at 4.4% of my portfolio. And I'm just going to name some things: Indiana Jones, Haunted Mansion. Let's say Disney Plus's Marvel's series. The thing that they all have in common is, for the most part, they all been flops. And not saying all of Marvel series has been flops, but a lot of them has been meh. You feel me? And a lot of the movies, meh. In 2023, it has been a very lackluster box office year for Disney, and even they said that they may have overwhelmed and diluted Disney with the Marvel. They might have given things that they really didn't have to. They didn't have to make a series for this one. They didn't have to go with this one. They might have just diluted the content for Marvel. So they're probably gonna pull back on that just a little bit. Maybe not, but we'll see. But Disney has been beaten down so bad that I do believe it's undervalued. So this is a time frame for me to just be buying Disney. Let's load up on Disney, buying Disney. So that way, once those box office hits are back and it's no longer a lackluster thing, now it's starting to grow. Parks are coming back, it'll start to grow. So I'm currently buying Disney, trying to up that a little bit, at least 7% of my portfolio. And then if I can get it to 7% of my portfolio right now, once it does hit that growth again, it could jump up to at least like a 9 to 11% of my portfolio off of growth alone, not me adding shares till it hits that point. Excuse me. So that's Disney. Next we have SoFi, and when you're investing, let's just say investing and trading are different things, but when it comes to trading, you have to find stocks that work for you. You learn their patterns and you trade them, and that's how you make a lot of money on it, right? That's what they say. So with me, I've been trading the SPY, which is the S&P 500, QQQ, and I've been trading SoFi and Palantir. SoFi is currently at 4.1% of my portfolio. It's not yet profitable, but it is expecting to post break-even earnings per share in this current quarter, which also has a year-over-year change of 100%. So it's not yet profitable, but this year, 2024, is expected to be its first year in profitability. Like I said before, people don't like it when companies aren't profitable. So once this company becomes profitable, we can see a run. They're a fintech that has the qualifications now to become an actual bank. So it's in that sweet spot in a sense. We'll see how it works out. If it does drop below $7, I am gonna be buying heavy on there. Cause like I said, I bought at 5, I bought at 6, and then I sold at 12. Oh, not 12. I sold at 11, 10, $9, and I might sell a little bit more, $8, and just let it drop. And then when it comes back below 7, I'll buy. I have buy orders already waiting to buy SoFi stocks. But this time, once I buy them, because they're so close to profitability, now I have the question to answer for myself is, do I sell it again when it goes back up to 12? Being like a 75 to 100% gain, or do I hold it for the long term? which is, since it's becoming profitable, it could definitely now become a long term hold for the future growth. So it's like, do I want to lock in the sweet profit that I know is going to come, or do I hold it for the long term and let's see if it breaks to 28, 30, 40, $50, right? So that's just a question for myself that I've got to answer. What am I going to do? Let me know what you're doing with your what stocks do you invest in, and what stocks do you actually trade? Let me know that in the comments, y'all. Next, I have TMF, currently sitting at 2.6% of my portfolio, and this is the 20-year bonds, but they're triple leveraged. So if the bonds move up 1%, this is moving up 3%, probably 3.2%, right? And the bonds are inverse to interest rates. So as they've been raising interest rates last year and the year before, this has been getting beat down, just been getting tore up. Now they're at the point where interest rates are at its peak, or they say at its near peak, or at its peak, and it's going to be sitting there for a little bit. Now that it's sitting there for a little bit, TMF might be, I don't want to say in a no man's zone, but in a consolidation phase right now. No longer just falling, but it's not really rising like it should be. So it might just consolidate and just go up, down in a little range for a little bit. But once they cut interest rates, and they continually cut interest rates, TMF is going to fly. And this will go from 2.6% of my portfolio. It could easily go to like 15%. Just off of growth. If you look at it where it's at now, 58 to like $64 right now, but its all-time highs was like $500, and that's when they were cutting interest rates, right? So we could definitely see how this is gonna work. If it does have a momentum growth like that, this could easily be a large chunk of my portfolio. But we're just waiting to see how these interest rates get cut, and how aggressive they're gonna be with the cuts. Are they gonna just let this sit here where we are right now at interest rates, and then make a cut, and then let's sit there for a little bit, and then make a cut, and let's see how the economy reacts to it? Or they're gonna cut, okay, then cut, okay, then cut, okay, then cut. So we're just gonna see how it goes. But the inverse to the interest rates, and as they cut interest rates, TMF will fly. Planet 13, ticker symbol PLNH, sitting at 2.3% of my portfolio. Planet 13 is poised for growth in multiple states as those states legalize marijuana recreationally, right? They open up another store in Illinois, Chicago. They have one prepared to open up in Orange Park. Their California one is near profitability now. The one in Vegas is doing well. So as more states lean to legalize it, the more profitable this company is, right? But the best catalyst for this play is federal legalization. When that happens, this play, I believe, can personally run back up to $7 within like a year. And if that happens, that'll be good for my portfolio. But until then, we're just waiting for different states to legalize it so that way they can open up their superstores there and their dispensaries there. And let's get this money moving. They have a nice little business model going. So I'm probably going to buy more if it drops below 50 cents. I'll probably buy a big chunk of it if it drops below 50 cents. And then that'll be my last time. And I'll just hold that and see what it does for the foreseeable future, right? Maine sitting at 2.2% of my portfolio. ticker symbol MAIN. This is my monthly dividend play. Pays me 24 cents per month per share. So if you own 4 of these stocks, you're pretty much getting roughly $1. Let's just say $1. We're gonna round up to $1. So for each 4 stocks you own, you get $1. And it has a strong revenue model. Their revenue has increased approximately 17% per year on average. So that them growing revenue, one, it causes the stock to go up, stock price to go up, and as well as that ensures that they have the capital to pay for their dividends. Because if this company was losing money, yeah, you're getting a dividend right now, but the stock is going down. So you get your USB going down, you get a little bump in your dividend, and then it's gonna go back down, eating that dividend away. A little bump for the next dividend, it's gonna go down. But with this one having a nice revenue growth, you'll see that the stock's gonna go up, a bump in the dividends, continue to go up, another bump in your dividends. So that's what you want to see. You want to see, make sure that the stock is going up, as well as they have the capital to pay their dividends on a monthly, quarterly, or annually basis, however much often they do it. Next is Virgin Galactic SPCE, sitting at 2% of my portfolio. This is definitely a long-term hold to 2026. They are expected to be cash positive then. With this play, I probably average down maybe 1 or 2 more times between now and 2026. They are redoing their business model in a sense. They're switching over to Delta vehicles, which should be a little bit more affordable. So they're right now they're in the research and development phase. I mean, they still have their flights going out from what they have already promised. But they're in the research and development phase for the new vehicles. 2025 they'll be in the testing phase. If you was around in 2022 with Virgin Galactic in their last testing phase, you know testing phase is real rough. You know, they might cancel the flight today, plan it for next month, cancel that one, then do it finally. So yeah, I'm really just holding this for the long haul for 2026. We'll see if it does pan out the way I want it to. If it continues to drop like heavily before then, I may just get out, use that as a tax loss harvesting. If you don't know what that is, watch one of my previous videos about tax loss harvesting. But I probably just sell that as a loss, claim my losses on my taxes, and then put that money towards something that is going to be running up in the short term. And then when 2026 comes around and space does start to make a little move, jump back in it then. So that's a possibility for me with Virgin Galactic. Next, I have Dogecoin. I'm holding that. I am expecting this to be another one of those cryptocurrencies. I expect all cryptocurrencies, really, especially the main ones, to be a sympathy play for Bitcoin on this ETF and this Bitcoin halving. So when it runs up, I expect Dogecoin to be one of those ones to run up. I am looking forward to the year, day, week, month, minute that Dogecoin hits $1. I will make a nice chunk of change off of that. But yes, I am holding Dogecoin currently, sitting at 1.6% of my portfolio, and I'm still adding in coins on that. Adding them up. I do believe it will hit $1. I know Elon Musk has been hinting at a metaverse for X, and if so, I think the US dollar and Dogecoin will be used for acceptable payments. So we'll see what happens with Doge. Continuing to buy more coins, waiting for the long haul. Palantir, ticker symbol PLTR, sitting at 1.4% of my portfolio. And the only reason it's so low is because I sold so much. I bought it around $15, $14. I sold it around 21, 20, 19, and $18. It ran up so fast. Last year on the AI hype, it ran up like 170%. Now, just like me, a lot of people are taking profits, and Palantir's starting to cool off substantially. So as it comes down, because this should have been one of those plays that were up like maybe 5% of my total portfolio. But I've sold so much, and as it comes down, I have limit orders ready to go into Palantir already from the profits I've made from it. So that's my Palantir thing. If it does get included into the S&P 500, this stock could easily go up to like $35, I believe. But since it's cooling down now, it is poised to grow naturally a little bit more, not as fast, but it will grow substantially, I feel like, in a more natural pattern. Stocks doesn't just go straight up and necessarily stay up there. So instead of going like up, it'll go like at an angle, which would be more easier for it to sustain at that level, at that point. Digital Turbine, they are expecting some softness this year as well. You know, they are a player in the mobile phone industry. And just like Apple, they're expecting softness in 2024. I don't plan on averaging down on this anymore. I'm just going to hold that, see what it does. If it doesn't do anything, I would say by mid year, it's a possibility I will cut this one. I'm not sure, but it's a possibility it may get cut. TMF, I have a call on that, which is 0.08% of my portfolio. I am going to buy one more. Excuse me, this has dropped. It goes from like $60 to like $110. The next time it drops below $60, I might buy two of these calls for the 2025. By 2025, I do expect a few rate hikes to be cut. And I expect TMF to be a lot higher than it is now, which means this call will be worth a lot more money. So I'm going to try to average down in that call. Shiba Inu sitting at 0.6% of my portfolio. When I'm up 100% on this, I'm going to sell it. No lie. I'm going to sell it after this Bitcoin run up. I'm not even sure this is going to be like a sympathy play for Bitcoin. I'm hoping so, but once I'm up 100% in this again, I'm going to sell it. I'm going to let it drop like a rock again. It wants to drop like a rock. At that point, I may just come back into it. But once I get up 100% in this again, I'm selling it again. Bionano Genomics, ticker symbol BNGO, sitting at 0.6% of my portfolio. This has been dropping like a rock. But with their adoption of their optical genome mapping, this play could actually make a nice little run up to like $6. It's currently sitting at resistance, and if it breaks that resistance, it could run. It has the technology. It's a good company. It just doesn't have the recognition that it needs. Let's say it like that. It's not publicly adopted yet, which is really holding back revenues. Once their technology becomes publicly adopted, this stock can make a serious run. This is one of those biotechnology plays. But yeah, I'm just holding this one. I'm not trying to buy more. I'm just holding it, and we'll see how this goes. Matter of fact, I might buy until my average price gets to a certain point. but I don't know what that point is. But I'm not gonna be just loading the boat on this ever again. Finally, we have XRP sitting at 0.2% of my portfolio. I'm gonna keep buying XRP. I'm just gonna keep buying it for the next couple of years. Buy, 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 buy. I like XRP. They won their suit against the SEC, and now that they've done that, they are the first legal security, I believe. That's a cryptocurrency. So they're in a great position right now. So that's why I so little in my portfolio. They just added it to Coinbase a couple months ago. So I've been buying little at a time. I'm not rich, so I have to nibble on things and get in when I can. But once this position is fully filled out and XRP grows, because I believe XRP could be like the next Cardano or Solana. Let's say Solana in price range, right? That's a coin, SOL. Look at that if you need to. But I believe XRP can go up to that range easily. So we'll see how XRP does. Thank y'all for rocking out with me. Leave me y'all your biggest holding in your portfolio, and let me know like what percentage of your portfolio is it. As you know, you see mine is Ethereum. It's only 18.9%. I'm trying to make things a little bit more even in my portfolio. I don't want something to be 18% of my portfolio. So let's just say, for example, if this goes to 0%, 18% of my portfolio will be gone. But really, it wouldn't, because I'd tell it before it goes that low. But go ahead, thank y'all. Thank y'all for watching. Hit that like and subscribe button. I appreciate y'all for rocking out with me. Yeah.